Today, I'm gonna break down how much dividends I make from my dividend investing portfolio of $140,000. Let's get naked. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe and energetic and energized. Today we're gonna be breaking down my entire dividend portfolio income. How cool is that? And I hope you enjoy seeing me in my hoodie. I believe that transparency is the key in finance world, and we lack that. We lack that in our world today, and my goal is to change it. Who else other than me is gonna make this happen? I've been working on my dividend growth portfolio for this past year, and if this video is gonna inspire you, be sure to like this video for YouTube algorithm. Right now I'm making around $5,913 annually in dividend income. Only a year ago, just a year ago, that number was $100. By showing you my progress in my entire dividend portfolio, I want to inspire you to start your investing. Start small and go big. Compound interest and compound growth is a thing here. And first, we're gonna be taking a look how many paychecks I actually got, how many dividend paychecks I actually got in April, May, and June of this year. Second, I'm gonna reveal my entire dividend investing portfolio of $140,000. I cannot believe that this has happened to me, and it only took 1 year to get to this number. I'm gonna break down what stocks and ETFs I have and how much dividends I'm getting from them. Third is gonna blow your mind. We're gonna be taking a look on the future returns and future projections in terms of dividends and growth. What's gonna happen with our portfolio in 1, 5, or 25 years? That thing is gonna blow your mind 100%. And how you can calculate your portfolio when you can start living off your dividends. And finally, we're gonna be taking a look what mistakes I made, what the learnings I got, and what are the changes I want to make to my portfolio to make it even better. Before we dive into my portfolio and all the paychecks, there are two ways how you actually invest into the stock market. You purchase growth stocks or ETFs that do not pay dividends, but they grow in value. You basically wait for the share price to grow and get to a certain point, or wait for X number of years before you actually sell those stocks and collect some profits. And that means that you're getting rich on paper. You're not getting sort of regular income from your investments with the growth stocks, right? You only collect profits when you sell growth stocks. Or you can start investing with dividend stocks or dividend ETFs and start collecting dividends every single month or every single quarter. Different companies pay differently. And those dividends are going to be coming to you as paychecks to your brokerage account. And what you're going to be doing with those investments, with those dividends, it's totally up to you. You can, pay your bills, you can pay your mortgage, your rent, and stuff like that. And what I do with my dividends, I reinvest them back to the stocks they're coming from. And this is actually the best plan for all the youngest investors out there to gain from compounding growth, from compounding dividends and all that throughout the years. Now let's take a look at all the paychecks I got from April, May, and June. And what are those companies who are actually paying all these dividends, right? Let's start with April, 19 paychecks. This is the biggest month for me in terms of dividends for this past year. Only 10 paychecks in May, which is still fine because not all the dividends are paying every single month. Some of them are on a quarterly basis, so every 3 months. That's why some months going to be lower than the others. 17 paychecks in June, so it's 17 different stocks or ETFs where these dividends are coming from. Most of my investments are in Questrade. I like it a lot. They have a ton of features out there. One of the best ones is Drip. Drip is an automated way to reinvest your dividend, which means that whenever you get paid dividends, you can use those money to reinvest back to the stock these dividends came from. And the next time you're going to be getting dividends, you're going to be getting more. And the next time you're going to be reinvesting again and then more dividends on top of that. And this is the way to snowball your dividend investments and eventually get even more money on top of that. And now looking at all the paychecks I got in April. The first one was Telus, $31. Then Real Canada paid me $21 almost. That's a real investment trust. Then Vanguard ETF, VDY, paid me $10. VRE is also real estate investment trust ETF, paid me $4.39. Then Philip Morris, this US stocks, paid me $90 in US dollars, which is pretty cool. There's Horizons Active, a dividend ETF, paid me $17. I actually sold it recently because it has pretty high MER, so I substitute with a different ETF. Then Plaza Retail Real Estate Investment Trust paid me $10. Then Starwood Property, also US company, paid me $4.32 US dollars. Then Bell paid me $61. Bank of Nova Scotia paid me $81. That's quite a chunk. XEI ETF paid $24. Then XDIV, it's a dividend ETF, paid me $3.36. Then TC Energy, it's a very good stock and I actually invested more into it recently, paid me $65.25. Capital Power and Gladstone Investment Corp paid $13.86, also US stock. Then SPAG, it's a low volatility, high dividend ETF on the US stock exchange, paid me $37. It also paid dividends every single month. Then the Power Corp, another great stock, paid me $35.80. And TD Bank, another great financial stock on Canadian stock market, paid me $84.53. And in total, I made in April 700 Canadian dollars and 91 cents. That's great. That's my best month, best dividend months ever so far. And I only expect that to grow over time. Not all the dividend stocks and ETFs pay dividends every single month. Some of them pay dividends on a quarterly basis, every 3 months. And hence, my month of May is actually a little lower than April. We're mostly gonna see here companies who either pay every single month, so going to be repeated from April payments, or companies who pay dividends on a quarterly basis and their dividend payment happened to be in May. We can see Rio Canada here, again, the same as in April with $21.04. VDY ETF, VRE ETF, Pembina Pipeline Corporation, I love it a lot. They paid $39.90. Plaza Retail, again, the same one, XEI, XDIV ETFs, the same ones from previous months. Gladstone Investment Corp, it's a monthly pay US stock, great stock, I like it a lot, paid $13. And SPHD, low volatility, high dividend ETF, also on the US stock market, paid $23.39. What I also want to share how the dividend reinvestments work, right? So for almost all the dividends I got paid, those were reinvested automatically back to the stock they came from. You can see for Pembina Pipeline, for example, they paid $39.90 and the dividend was automatically reinvestment back and purchased a single share of Pembina Pipeline for $38.50. For Plaza Retail, for example, the same thing, they paid $10.15 in dividends, and that was enough to actually purchase 2 shares of this stock with this dividend payment, in total for $8.03, right? The change comes back to your investment brokerage account and you can use for other investments later on. XEI ETF was also reinvested, paid me $24.47, and it purchased a single share for $23.58. So I now have 1 share more for XEI ETF. So that's how DRIP works. And this is amazing. It's automated. You don't have to do anything for it. And in total for the month of May, I got paid 185 Canadian dollars and 60 cents. Now moving on to June, it has a stock which I like very much, one of my favorites, and it pays a lot more than others. Why? Because I have a lot more invested into this stock. You can see Canadian Utilities here paid $80.92, and then my favorite one, Enbridge, paid me $129.43. That's crazy. Forties paid $7.58. I don't have a lot of investment into Forties. Rio Canada again paid every single month, as well as VDY, VRE ETF. ExxonMobil paid me 87 cents. I actually get rid of this stock almost completely. That's why this dividend payment actually dropped significantly. I invested into other dividends once ExxonMobil got out from the market crash of last year. Then Atrium Mortgage Investment Corporation paid me $29.18. Plaza Retail again, monthly dividend payment. Pembina Pipeline, monthly dividend payment. Gladstone Investment Corp, also monthly dividend payment. So I keep getting these dividends every single month. That's amazing. XIC paid me $19.18. XEI and XDIV also in the monthly dividend payment stocks keep paying me all these dividends. That's pretty cool. Gladstone Investment Corp paid me $13.86 US stock. Nice. Then Toronto Hydro One stock paid me $34.62. And this is one of the most recent investments I made. And the last one was, of course, again, SPHD, my high dividend low volatility ETF on a US stock market. Paid me $24.77 US dollars. So that's all the dividends I got for the last 3 months. Now let's actually take a look at my $140,000 dividend investing portfolio. There are a couple referral links in my description below for Wealthsimple Trade or Quest Trade. Those are referral links, so you're gonna get some bonus on top of that, some cash that you can use to buy some stonks. So if you are considering starting investing with Wealthsimple or Quest Trade, Go check them out. So here's my entire portfolio, which consists of 3 different accounts: my RSP, my TFSA account, and my wife's TFSA account, which altogether accounted for $138,985. This is crazy. This number also jumps back and forth every single day, depending on the share price for all different investments, which is fine. It's still growing pretty nicely over time, which is what I want. I use this tool, Track Your Dividends, for tracking all my dividends, and it's actually pretty useful. It has a lot of features out there, and it tells you what your portfolio looks like, what the dividend yield, average dividend yield for your entire portfolio. You can create separate accounts for like RSP, TFSA, and track everything out there. The average dividend yield for the entire portfolio is at 4.25%, and the annual dividend income, as I said before, is $5,913, which is great. The beta parameter for the entire portfolio is 0.8, which means that the stocks I have in my portfolio is actually pretty low volatile, even on a short-term period. Now, if we scroll down, you can see their prediction for my monthly dividend payments throughout the next year if I'm not going to make any changes to my portfolio. Basically, in July, I'm expected to get $759. Great. Then in August, it's going to drop down to $190 again because, I have only some of the stock that pay me every single month. I'm trying to get more of those so I can reinvest them back on a monthly basis. If we look into allocation for my entire portfolio, you can see that 92% of it is in equity and only around 7.7% in real estate. Now looking into the sector and industry allocation, you can see this picture. In the industry section, you can see actually what my ETF holding is around 20%. That's nice. And that's what I plan to hold, up to 25% allocated into ETFs to sort of have this broad diversification from get-go. Going further, you can see all individual holdings and how much they are from my invest portfolio. MSPHG is number 1. It has an 8% allocation in there. Then Philip Morris, then TD Bank, Pimina Pipeline, and so on. You can drill down, even see how many dividend payers I have in my portfolio, around 28 of those. And the highest dividend yield company would be Starwood Property Trust with 7.4% dividend yield, which is great. And the largest dividend income is my favorite stock, Enbridge, which pays me $524 every single year in dividends. That's amazing. You can see even more in-depth details for all different sectors and how the stocks are allocated there. If you're interested in that, I'm constantly looking into this to see what is my portfolio, how my portfolio is performing, and if I need to make any changes to it. Going back to the dashboard, I want to say that from my annual income and annual dividend income of $5,913, that comes down to around $500 every single month. That's crazy passive income opportunity for all the dividend investors. And now the most exciting part, the most fun part, is that we're gonna go into the future value of my portfolio, which is gonna blow your mind. It blew my mind, certainly. I'm making right now around $6,000 a year in dividends, but my goal is to get around $60,000 in dividends or more so I can start living off my dividends investment. In Ontario, Canada, for example, if you're getting paid around $60,000 in dividends per year and you don't have any other source of income, you're gonna be paying 0 taxes, which means that your dividend income is gonna be tax-free. How cool is that? I plan to get to that number in the next 5 to 10 years. Keep watching my YouTube videos. I'm gonna keep you updated on what's going on and how you can also make that happen for your portfolio. And now let's go into the future value and see what is happening there. And the very first scenario is gonna be that I'm gonna stop contributing to my portfolio today. No more contributions, is gonna be growing as is for the next 5 to 25 years. What's gonna happen? How it's gonna perform? And if it's gonna go anywhere, right? So say my portfolio value right now is $140,000. So next year it's gonna be at 147. Then 2023, 157. And then in 10 years, my portfolio value is gonna be at $265,000. And my dividend payments is gonna be at around $18,500 per year in 10 years. And in 25 years, with 0 extra contributions to my current portfolio, my annual dividend income is gonna be at $133,000 per year. And now get this, my ending value of my portfolio is going to be almost at $1.4 million. So this is the way the compounding works. This is how the stock market, the investing, can make you rich. And by 2045, I'm not going to be even at my retirement age. That means that I can retire early and live off my dividends. And that's exactly what inspires me to invest more, to contribute more to my portfolio, to get to my financial freedom as early as possible. And now the next scenario, which is going to be even crazier than the first one. Of course, I'm going to be contributing more to my portfolio. I'm going to be adding more money to my investments so it actually can grow even better and even faster, right? So I'm going to be doing, say, a very conservative $1,000 a month. It means $12,000 a year to my portfolio. And in 10 years, my ending portfolio value is going to be at around $400,000, which is crazy. And my annual income is going to be at around $27,000 per year. In 25 years, I'm going to be getting around $244,000 in dividends per year, which is way more than I need currently to sustain my lifestyle. And my ending portfolio value is going to be at around $2.4 million. And the final scenario here is that what I currently do, what my contributions are today, and they come down to around $36,000 per year to my investment portfolio. You can see that my portfolio value is going to be around $700,000 in 10 years, and my dividend income is going to be at around $46,000 per year. This is actually almost at the mark of my goal of $60,000 a year. And if I can contribute a little more than $36,000 a year, in 10 years I can get to the mark of $60,000 a year in dividends alone. Looking at these numbers, this is what inspires me to keep investing, to keep growing my dividend portfolio and get the dividends back, reinvest the dividends back. And I really hope that's going to inspire you to start your investment journey, to start your dividend portfolio journey or your growth portfolio journey, whatever works for you is whatever works for you. And all of this comes down to my favorite phrase: time in the market is way better than time in the market. Do not try to predict anything. Just keep contributing, keep investing on dollar cost averaging approach, and you're gonna get there eventually. It doesn't mean you need to start big. You can start small with as little as $1,000. Investing is not about getting rich overnight. It's not gonna happen. Investing is about consistent contributions and time in the market. Now, a couple of mistakes I noticed in my portfolio. These are not necessarily mistakes, more of like adjustments I should do to course correct my investment portfolio. The first one is that I'm pretty heavy on financial sector, around 20%. And well, with Canada, it's actually not a surprise because financial sector is actually dominating the Canadian stock market. Every ETF out there has a pretty big chunk allocated into financial sector. And on top of that, financial sector pays you the most amount of dividends back. Canada is basically just a big bank. The second point, the second learning is that I have a couple of controversy stocks in my portfolio where I invested into companies that I think might just skyrocket out of the blue and make me a ton of money. Who doesn't want that? And a couple of players like that is Coinbase and Palantir that I have in my portfolio. And these two are pretty risky investments. Nobody knows where they're gonna go. But I bought them on purpose. First, make my portfolio a little bit more fun. And also second, I'm gonna be holding them for a long period of time, at least 5 to 7 years. I only let myself to have fun or allocate to this sort of investments around 5% of my entire portfolio. But right now I think it's a little too high, so I want to bring it down to around 2%. And if you're looking to add more dividend stocks or just add dividend stocks to your portfolio, check out my playlist where I go through all the best dividends out there on Canadian stock market. Maybe there's something for your portfolio. Also, make sure you smash the like button for YouTube algorithm, subscribe to my channel, hit the bell, and I'll see you around. All the best out there. Keep investing. Cheers, bye.